Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about SHANGRI-LA Asia interim report. Shangri-La Asia Limited offers a diverse range of businesses and services across various sectors. These include hotel development, ownership, leasing, operation and management, property development for sale, office and commercial property development, ownership, and leasing, serviced apartments/residences, restaurants, amusement parks, marketing, communication, training, consultancy, and reservation services, intellectual property rights ownership, retail trading activities, wine trading activities. The company operates under several brands, including Shangri-La Hotels and Resorts, Carey Hotels, JEN by Shangri-La, Traders Hotels, Rasa, Summer Palace, and Shang Palace. The stability of Shangri-La Asia's stock price over the past year can be attributed to several key factors. Despite mixed financial results, including a 10.2% decline in profit attributable to owners, the company demonstrated strong cash generation and strategic business developments that likely instilled investor confidence. The expansion of its portfolio through new hotel openings and renovations, such as the island Shangri-La in Hong Kong, showcased the group's commitment to growth and modernization. Additionally, the company's prudent financial management, including diversifying funding sources to maintain an effective gross interest cost at 4.45%, reassured investors about its financial health. The stabilized Asian hospitality market, with rising revenue, passenger kilometers, and average daily rates, provided a supportive environment for hospitality stocks. Furthermore, an upcoming dividend of HKD 0.05 may contribute to sustained investor interest. Overall, Shangri-La Asia's efforts in maintaining revenue growth, expanding strategically, and managing finances prudently have likely contributed to its stock price remaining relatively stable over the past year. The primary drivers of revenue growth or decline can be summarized as follows. Revenue growth is primarily driven by the increase in rent and occupancy rates in Mongolia, higher rents in Sri Lanka due to a stabilizing financial situation, and additional revenue from new properties such as Shangri-La Center, Fuzhou, Phase II in mainland China. Hotel properties in Hong Kong, France, and Sri Lanka have also seen an increase in profits. On the other hand, revenue decline is mainly attributed to lower effective share of revenue in mainland China's hotel properties and decreased revenue from other investment properties in the same region. Additionally, property development for sale and other business has experienced a loss of $0.3 million compared to a profit of $0.9 million in the previous period. Revenue-neutral areas include hotel management and related services, where higher operating costs have offset any potential growth, and investment properties, which saw a marginal decrease of 0.8%. Net income and profit margins decline. The financial performance of the company has taken a hit, with net income decreasing by a significant 38.7%. This decline is also reflected in the profit margins, which have dropped by 3.1% in effective share of EBITDA and 13.9% in consolidated profit attributable to owners of the company before non-operating items. The reasons behind this downturn are not explicitly stated, but it suggests that the company may be facing operational or market challenges that need to be addressed. The company's financial performance indicates a lack of sufficient funds generated from its core operations. This is evident in the negative operating cash flow, which suggests that the business is struggling to cover its expenses and generate profits. As a result, the company may need to rely on external financing or make significant adjustments to improve its financial stability. The company's debt level and interest expenses have undergone some fluctuations over the past year. While the total outstanding balance has increased to $7,182.6 million as of June 2025, this is not a significant change from previous years. The net borrowings also saw an increase of $92.6 million to $4,513.9 million. On the other hand, interest expenses have decreased slightly. According to various pages in the financial summary, the total interest expenses dropped from $151,232,000 in 2024 to $149,212,000 in 2025. Representing a decrease of 1.9%. Additionally, the net interest expense also saw a reduction from $150.6 million in 2024 to $149.3 million in 2025. Overall, while there are some changes in debt level and interest expenses, they do not appear to be significant or drastic. The company's financial performance varied across regions and segments in the recent period. On a positive note, the People's Republic of China, Japan, and Singapore demonstrated strong growth in hotel properties, with increases of plus 51.9%, plus 48.6%, and plus 24.5% respectively. However, other regions struggled. Mainland China saw a significant decline of minus 180.6% in hotel properties, while Australia and United Kingdom experienced decreases of minus 73.3% and minus 4.8% respectively. France initially performed well but later had no data available, N/M. In terms of segments, the company's hotel properties segment showed a slight decrease of minus 0.7%, while property development for sale and other business incurred a loss of US$0.3 million. Management's outlook. Focused on sustainable growth, the company is taking a proactive approach to managing currency risks by increasing its renminbi debt component. This strategic move aims to mitigate potential losses due to exchange rate fluctuations. Additionally, management remains committed to delivering value to shareholders through sustainable growth, achieved through disciplined financial management and targeted investments. The company's financial summary reveals that it has engaged in both dividend payments and share buybacks. Specifically, the records show that the company has paid out dividends on multiple occasions, as noted on pages 13 and 55 of its financial reports. Additionally, the company has also utilized its resources to repurchase shares from the market, further demonstrating its commitment to returning value to shareholders. That concludes the financial summary for SHANGRI-LA Asia. Feel free to comment below, and I will be happy to answer them when possible.